Hi, mining community. Welcome back to another episode of the Dig Deep, the mining podcast, a show that brings you the latest insights, thought leadership, and stories from across the global mining industry. In today's episode, we have Alex Walker, who's the CEO of East Star Resources, a company focused on unlocking copper and gold opportunities across Kazakhstan through a combination of brownfield development and greenfield exploration. Throughout this conversation, we're going to discuss why major industry players such as Endeavour Mining and Xinhai chose to partner with East Star, how the company approaches explorational risk and portfolio management, and why Kazakhstan remains one of the most underappreciated mining jurisdictions globally, despite its long mining history and significant geopolitical potential. Alex is also going to share his insights into how modern explorers should think about value creation beyond market sentiment, the challenges junior mining companies face when transitioning from discovery to development, and why understanding geology, infrastructure, and operational execution is becoming increasingly important in today's market. We're also going to explore the broader industry themes, including investor perceptions of mining, the longer-term outlook for copper and gold, and why the mining sector remains fundamental to both global economic growth and energy transition. And obviously, we're going to speak about a lot more, but there's some of the key themes. So, Alex, great to have you on the podcast again. How are you?
Yeah, great. Thanks, Rob. Thanks very much for that introduction, and good to see you again. It's been a little while.
Yeah. Certainly, I think this is maybe the fourth time you've been on. So for those that may have not listened to previous episodes and those that may not know of you, I just wondered if you could just tell us a little bit about yourself, a little bit about your career. Obviously, we were just speaking off air. You were living in Kazakhstan and now you're back in Perth. So I just wondered if you can just share with us your career and your journey up to current day.
Well, sure. So my name's Alex Walker. I'm the co-founder and CEO of East Star Resources. As you said, the London-listed copper and gold explorer in Kazakhstan. We set up the company we started looking in Kazakhstan back in 2018, 2019. And we set up a private company in 2020 to apply for licenses in Kazakhstan off what we thought was a really fantastic thematic of a new country entry in a time that the entire area was being released over a series of years into a first-come, first-served system. And so we set up that company, and I RTO'd it on the London Stock Exchange at the start of 2021. And I came in as the CEO of that company and have been running it ever since. And as you said, I was in Kazakhstan for the vast majority of that time, the last 4 years, and just through the middle of last year moved back to Perth. Before all that, I had been doing a number of different roles. One was I was a co-founder of a company called Scandi Vanadium, which had vanadium assets in Sweden. And that's actually how we started looking at Kazakhstan as a jurisdiction, largely around what we saw as major above ground risk issues in certain jurisdictions. And so we really wanted somewhere with geological potential and lower above ground risk to move assets through to development. And I was the general manager of that and co-founder of that for a few years. And before that, I was in mining investment banking. So worked in London for 7 years for a few different firms and in Perth for about 7 years before that. So I think I'm 42 this year, so the career's starting to get a few notches on the belt with a few different jurisdictions, and very happy to be doing what I'm doing today and really being a contributor to both the Kazakh economy and also to what we see as a really burgeoning industry and a really exciting place to be in today's economy.
Yeah, as mentioned, we were speaking off air, and you were living out in Kazakhstan, and you moved to Perth. How's that change and transition been, and how has it affected the business?
I mean, the change has been really smooth. It's something that I wasn't specifically planning, as we were discussing before. I wasn't planning a move. But you always like to build redundancy in your business and prepare for the situation that you can't be on the ground as much anymore. The reason that I moved to Kazakhstan in the first place is I wanted an absolute intimate working knowledge of the operations. I wanted to know the people who would be doing our accounts, applying for licenses. I wanted to understand the accounting system, the reporting systems, the people at government level, the people at who are dealing in projects. And so, it was 4 years of really intimately understanding all aspects of exploration, mining, and development in Kazakhstan and the people. And, as part of that, I was co-founded the Kazakhstan Chamber of Mines. We were part of the BHP Explore program. And obviously, the result of all of that work has helped us get partnerships, as you said, with groups like Endeavour and Xinhai for our great operating knowledge. But at some point in time, the CEO of the company shouldn't be dealing in the micro of the operations. And I found myself doing a little bit too much, a little bit too much micromanagement. And I don't know if I realized it at the right time or a bit too late, but one of the reasons of moving back to Perth was to remove myself from that day-to-day operation, and I can focus more on the strategy of the company. So strategy, marketing, and business development. And, the result of that was after moving back here, we did close deals with Xinhai, we did close deals with Endeavour, and hopefully there's a bit more business development to come, in the future as well. So overall, I'd say the transition's been pretty smooth. We've got a fantastic team in country, and I'm really, really proud of the work that they're doing.
Great. Just wondering if you could just give us a snapshot of East Star Resources.
Sure. So East Star is a copper gold explorer focused in Kazakhstan. Our most advanced assets are in the east region of Kazakhstan, in the Rudny Altai volcanogenic massive sulfide belt. We've got one project called Vakuba, which has a JORC resource of just over 20 million tonnes at about 1.2% copper equivalent. It's about 1.1% copper. And we have recently signed a partnership deal with a group called Xinhai Hong Kong Mining Services, who have a tremendous amount of experience in building processing plants and mines, more than 2,500 processing plants around the globe today. And we were fortunate enough to visit their factory last month, and incredibly impressed with the operations and what they can put together in a short space of time. So the partnership with Xinhai is for them to take us all the way through to development. They, in a series of iterations, going from 15% through to 70%. Once they're in production, Xinhai will take us through all of the feasibility, permitting, mine build, processing plant build, purely for an equity stake with no further debt carry or debt repayment or anything like that once we're in production. And that was a really fantastic opportunity for us with an asset that potentially would have taken us almost certainly would have taken us a lot longer to drill out, do the feasibility and permit. And so we're really pleased to now have a path to production for our flagship asset. We've got another asset in that region called Rulika. It's historic Soviet drilling, which we've converted into an exploration target that's just over 20 million tonnes again, this time at about 2.4% copper. And that's going to take a little while to permit. It's got close proximity to settlements and hydrogeological areas. And so it's something that we are basically working through the permitting process on at the moment. May seek to partner on if the right partnership comes along as well. On top of that, there's additional exploration areas for that region, Talovskoy and Rulika North. Rulika North, for example, we drilled 120 metres of disseminated sulfides last year around an IP anomaly, quite a big, 1 by 1.5 kilometre IP anomaly. And so that shows us the presence of a big hydrothermal cell, and we'd like to keep exploring that area to see if we can find an additional VMS deposit, which is really, really close to infrastructure and really, really close to the historic Rulika deposit. So that's our VMS portfolio and most advanced in terms of data and development. We've then got a gold joint venture with Endeavour Mining. So Endeavour is a top 10 global gold producer. We signed a deal with them at the end of last year where they will fund initially $5 million over 2 years of exploration, and then into $20 million to take us through to a JORC resource. And then they'll fund a pre-feasibility study before we have to contribute our 20%. What they'll end up with is 80% of that portfolio. So we're over the moon to be working with Endeavour. It's great to bring a global major gold producer to Kazakhstan. It's great to be working with the team that were awarded the best explorers in Mines and Money, I think it was, or Resourcing Tomorrow last year. And having closely worked with that team now, I can see why that's the case. So we're super happy for their balance sheet, but we're also super happy to have their expertise and their backing to really do some fantastic grassroots work. So that's kicking off in haste this year as well. So they're the major parts of the portfolio, and obviously, as I said, right at the start, continued business development from our end. We've been operating in Kazakhstan for 5 years now. We've got a big pipeline of opportunities, and with the time and capacity to execute, we'd like to look at what else might be delivered from that.
Yeah. Obviously, you've just mentioned both Endeavour Mining and Xinhai have partnered with you. What do you think, or why do you think they were attracted to eStar Resources?
Yeah, I think, well, for two different reasons, I suspect. For us, I think Endeavour, it's a new country entry for Endeavour. And so, what they want is they want to be able to build off infrastructure. It's quite difficult for large companies to enter new jurisdictions. You've got to do a considerable amount of due diligence, build a team, and so it can take many, many years to do it with the operational requirements and health and safety requirements that they have. We worked with certain members of the Endeavour team. Sonia in particular, who's recently joined our board, was Vice President of Exploration at BHP. So we worked with her quite closely during the BHP Explore program. And there was she understood the due diligence that BHP put us through. So that was, I think a big tick in the box and sped up the process for Endeavour. But also she had an opportunity to work with myself and Chris, our technical director, and meet other members of the team. And so, I think it was understanding that the work we do is a good geoscience, but it's good geoscience done, methodically and with the right safety procedures and in-country expertise to get things done efficiently and know who the operators are and so on. So that's, I think, the reason why Endeavour came in with us, excluding the geological prospectivity of Kazakhstan, of course, which is the reason why they wanted to come there in the first place. And then with Xinhai, probably a bit more specific. I mean, they're asset-specific people. It started off as, look, here's the Vakuba deposit. Are you interested in it? And what we think will grow from that, based on what appears to be a really strong growing relationship with them. It might be more than just Vakuba in due course, but initially, they saw an undervalued asset, an undervalued company, and an opportunity to do a deal to bring something into production using their expertise and make money out of it. So, there's a whole wild world out of there of people that that build mines and make money and don't just mine markets, and they're the people we're interested in working with. So that was a really good result.
This episode is sponsored by Mining International. In today's market, finding the right mining talent isn't easy. Mining International works closely with mining companies to identify and secure senior and technical professionals through a tailored search approach. If you're hiring or exploring your options, you can contact Rob Tyson via the show notes to start a conversation today.
And I suppose moving on, the market obviously often values explorers based on sediment rather than actual fundamentals. How do you think investors should value a company like eStar?
Yeah, it's a good question, because you sort of think if we separated out aspects of the portfolio, it wouldn't have a big bearing on our valuation. I mean, something that's a bit more advanced that has a JORC resource like Verkuba, you can do resource per ton in the ground. I did that a while ago now with a bunch of ASX peers, and we were trading at about 20 cents in the dollar, and so which is also one of the reasons why it can be difficult to advance these projects, because you feel you're fundamentally undervalued and therefore your cost of capital is quite high to spend money on them yourself. And so, doing a deal with Xinhai made a lot of sense. So now you could look at Vancouver and say, well, what is that for Star? It's zero dilution through to production. If they do get into production in, let's say, 2 years' time, 30% of 1 million tonnes per annum at whatever the copper price is and whatever the recovery is at 1% copper, we can see a pathway through to $25 or $40 million worth of cash flow or worth of revenue for eStar's percentage on that operation alone. And so you could do a discounted cash flow valuation on that, and I think that would be quite fair, and that would see us at a pretty big premium to where we are today. Again, especially considering there's no debt we're taking on and no dilution from an equity perspective because there's no more funding. So, that would be the first part, and then obviously, you can risk adjust that, and then the same thing for Rulika. I mean, if you applied all the same metrics, it's twice the grade, so twice the production profile, a little bit more risk. Geologically, there's less drilling. We don't have our own core. There's additional permitting risk, as I mentioned earlier. So you'd apply bigger discounts. But, given the profile's the same, there's a chance that in a few years' time, if we did do a similar deal on Rulika, eStar hasn't spent a cent and we've got, the equivalent of 10,000 tonnes a year of copper being allocated purely to our percentage of two operations. So you start to get a sense that it's heavily discounted from a risk basis from that perspective. What you add in terms of that to Blue Sky on discovery, I don't know. That's a tough question to ask or to a tough question to answer. But it's not nothing, and especially when you've got people like Endeavour, like I said, not only with their expertise and in a country like Kazakhstan where you can peg large tracts of land, but also the fact that they're funding it. So, you shouldn't be wearing the same sort of dilution discount for those or that level of greenfields exploration. So yeah, I guess pre-production development and greenfields all would play into a valuation metrics on all of that, Rob, and we'll see what else we can bring to the portfolio just to throw something else into the mix. But what I like to do is not be reliant on one specific thematic, one commodity that's having a hot run. We're interested in building a company here, and so we need to play long-term thematics on jurisdiction, on commodities, and on our partners. And so we really want to see the results of that pay off over the next couple of years.
You've picked up and dropped a number of licenses over the last 3 or 4 years, and currently have exposure to obviously both brownfields and greenfields exploration. What does that really, I suppose, tell us about your exploration approach and your attitude to risk, and how do you balance the lower risk exploration development opportunities against the potential upside of new discoveries?
Yeah, that's a constant measure and remeasure. Each project we look to take on in the portfolio is done, through a very rigorous geoscience sort of measure, right? Let me give you a better example of this. Kazakhstan is known for having huge porphyry belts that are drastically underexplored, and we're obviously looking there now. The Karaganda, Balkashili magmatic arc, and the Boshakol arc, and so on. 10 million tons of contained copper in Actigai and 5+ in Boshakol. These are big porphyry discoveries, and there's so few of them, so there's bound to be more in the belts. And we hadn't previously really gone in there, not for lack of understanding, but for knowing that porphyry exploration can be quite difficult, risky work for a junior company. And so our strategy was what's achievable for a small company. And that really drove our infrastructure-led exploration in the East region. You can find a beautiful big VMS, but you don't have to find a beautiful big VMS to have a return on your invested capital. And so huge amounts of historic data led to very limited exploration spend for a big result. I'd have to check the numbers, but our discovery cost, obviously it's an old deposit, but for Vancouver to be on our balance sheet, wouldn't have cost more than about $15 or $20 for a ton of copper, which is trading at 14,000. So that's not bad. So we wanted to be very, very careful with our exploration spend, but we do like the big blue sky tier one upside. And that's BHP Explore was a fantastic opportunity for us to do that grassroots work. $500,000 they paid for all of the work that the stock market doesn't really like to pay for in a junior company, and built a fantastic database of hundreds and hundreds of thousands of square kilometres, to give us access to that. And that's led into the work with Endeavour and fed into that. And it's also led into us having things like Pickett and Snowy, which might be drill-ready prospects for us in the not too distant future. And we'll make a decision on if we progress those or partner with those on a risk-reward basis as well. So I don't know if I've answered your question specifically, but what I would say is that every single project we have has a determined next step of exploration. It might be soil sampling, it might be geophysics, and then at each of those levels there's a decision point. Are you getting a strong enough geochemical signature to take the next step? Are you getting a strong enough geophysical signature to warrant sinking a drill hole with the surface expression? Is it one drill hole or is it 5? And is that going to give you the right answer? And is the market going to reward you or heavily discount you for that work? And so, we've done lots of partnerships because greenfields exploration is risky. You do need to spend a fair amount of money. And if it's me allocating that capital, which, I heavily influence, and I'm heavily influenced by our technical team, then I want to be really sure that there's a great risk reward of that spend. And so I tend to lean towards things with much larger historic data if it's E-Star shareholders that are paying for that work. And so that's what we will continue to push in our business development. Whereas if we pick up porphyry prospects and things like that, well, then it's just what's the cost to test this target versus the potential outcome, and those need to be assessed as well. So yeah, each project comes with very, very specific decision points. You mentioned that we dropped a lot of projects, and we did a small soil sampling campaign on Judza. Didn't come up with as high levels of anomalism as Pickett obviously did and as we'd hoped. So we drop it. It's not something that we want to talk about land banking, talk about, having a million targets. We want to spend money on things that we think are going to deliver results.
Your projects sit in regions with long mining histories, but relative limited modern exploration. How does that data translate to exploration success?
Yeah, I mean, we've got one good example in Vancouver where historic drilling we've converted to a JORC resource after only 6 drill holes, because largely that was validating the historic data. So, that's why we can say that the discovery cost in essence is so low, because we're using that historic data. So, that's been a fantastic result for us. And if we can do the same thing at Rulika, then that would be, pretty amazing. If Rulikas, if they were both on our balance sheet, if we can convert the Rulika exploration target in the same way as we converted Vancouver and we own them both 100%, we'd have, 700 to 800,000 tons of contained copper at nearly 2% on our balance sheet from probably drilling 5 to 6,000 meters. So that's a pretty not many companies could say that that's the case. So if that's something we can deliver, that would be amazing. And the way that the Soviets explored was actually really detailed. It was really, really good work. If you can find the historic data and translate it accordingly, you can um, decrease your exploration area very, very quickly. You can promote areas to prospect ready based on that data, so you can refine your exploration targeting very, very quickly as well. And then understanding what kind of work they did, what were the limits to the assays at the time, and how does that compare today to XRF or ICP-MS or Aqua Regia, for example. And that helps indicate what's your assay method. If you're looking for something undercover, is there going to be an opportunity there, or has an area been trenched? What style of mineralization would they have been looking for, and what did they assay for? All of these things can really strongly influence where you spend your exploration dollars. So from my perspective, it helps refine your search area very hard and fast, and it helps you focus on specific areas, either to promote them or to decrease them based on the historic work. So I think it just saves time and millions and millions of dollars in exploration spend. So I recommend looking at ex-Soviet countries that give you ready access to that data. It's a fantastic tool.
Do you think there's still genuine discovery potential in Kazakhstan at scale?
Yeah, I do. I mean, this is a country that's the size of Western Australia. It's 2.7 million square kilometres, and they haven't had any major discoveries for 40 years. I mean, there's been development of operations, and Actagai and Boshakol are two of those, giant porphyry systems that were discovered during the earlier Soviet times, but not developed, or certainly not developed to their full potential. And now, they're two of the largest copper producers and two of the lowest cost producing mines globally in terms of C1 cash costs for copper. And so that's pretty outstanding. But a huge chunk of the country is underexplored or unexplored. You've got areas of cover. And when you look at Western Australia, all the discoveries that have happened in the last even decade, but certainly 20 years, from De Grasser to De Grey to Greatland Gold, there'd be a dozen multi-billion-dollar mines that have been discovered in Western Australia in the last 15 to 20 years. So there is a huge opportunity in Kazakhstan in all of these belts. We're starting to see it. Aris is a peer of ours listed in on the TSX, and they appear to have made some pretty fresh porphyry discoveries. And I think we won't be too far behind for new discoveries on top of what we've already got. So just takes exploration dollars, Rob. You start throwing money at this, and there absolutely will be discoveries off the back of it. There's no doubt.
I guess Kazakhstan doesn't always receive the same attention as jurisdictions like Canada or Australia. But what some major mining groups are clearly increasing their exposure there. What do you think the investment community misunderstands about Kazakhstan as a mining jurisdiction?
It's pretty funny. I've been in meetings and someone said to me, "Oh no, I lost money in Kazakhstan 25 years ago. There was a project which disappeared, and you poke a little bit and you find out that it was Kyrgyzstan, and which is pretty funny. Look, Kazakhstan is one of the largest jurisdictions for foreign direct investment for the European Bank for Reconstruction and Development, and it's a critical infrastructure and transport route between China and Europe. So what it is nearly 2.7 million square kilometres of strategic land for both the east and the west, and they vie for influence by foreign direct investment. Building infrastructure, building mines, and so on. And that gives it a very significant degree of stability. It's been a very stable country since leaving the Soviet Union, since 1991, under previous management and now under a new president. And, it takes policy change like modelling the new mineral code off Western Australia's, which happened and was put into force at the end of 2018, early 2019, to draw those investors out and come to these jurisdictions to know that they've got not only security of tenure, but a clear system, a clear understanding of how you can progress from an exploration license to a mining license, and how the environmental policies work and above ground access works and so on. So, the country is getting a lot of interest in foreign direct investment. We've seen the US start to come in as well. I mean, they're already big in there in oil and gas. Shell and Chevron are two of the largest foreign investors in the country. And so for me, I'd love people to understand that countries like Kazakhstan should trade at a premium rather than a discount. The same deposit in Kazakhstan is worth more than that deposit in Australia or Canada or Chile, for that matter. It does not have the same water issues. It doesn't have the same level of above ground risk. You can permit things faster. You don't have things like native title and so on, and you've got a population that has been involved in mining for hundreds of years, and so they really appreciate what it does for the economy and what it can bring to local areas in terms of employment and in terms of social support. And they've got that intrinsically built into the system, where you have to provide social support to the region when you are building a mine. So, for me, I'd take a deposit in Kazakhstan over just about anywhere else in the world on the same geology. It really is a fantastic place to work.
Mining is often viewed as a cyclical industry, but it's also foundational to modern living and the energy transition. What is it about mining and your commodity choices which you think investors need to keep in mind?
Yeah, look, you've got a very mining-oriented group, I think, who listen to the podcast. So I don't know if I've got anything really major that would shift a perspective on that. From our perspective, again, eStar wants to be a bigger company. It doesn't want to play the market and ride the next trend. And trends are fun and they're great, but it's hard to do that if you want to be legitimate in this business, from my perspective. So you either have an asset and get lucky with your timing, or you work on commodities where the timing is irrelevant, and the assets are good enough to carry through any cycle. And that's been, I guess, our focus. Certainly how we feel about gold and copper. And copper in particular just has such a strong long-term thematic of demand that for me it's a bit of a no-brainer if it takes an extra year or two even to find something or put something into production. Well, it's probably still an appreciating asset, because I can see the copper price continuing to have massive supply-demand dynamics, on both sides. And again, no need to go into mines shutting down, the biggest mines in the world going through production issues and so on. It's prevalent without that. And things like that just drive extra supply shocks. So for us, pick your commodities long term. Gold and copper are two which we're just very, very happy to be in for the next 100 years if we were still around at that time. And pick jurisdictions that you feel comfortable that you're going to have that security of tenure. I've got friends in Kazakhstan that run really small scale gold operations, just heap leach operations running at about 0.5 grams per tonne up in the Kostanai region, which is freezing cold for 3 or 4 months of the year. And two to 3 years ago, they were making about $12 million a year in dividends off the back of, like I said, small scale production. And a year later, they're making 21 million because the margin increase. Now, you could say that about a lot of gold companies, but what didn't happen is their costs didn't blow out. It's the same small operation. You've got this wonderful ability to keep your costs under control in a country like Kazakhstan. And so I think that's just a real potential for that extra bit of leverage to hopefully what continues to be a bullish thematic in copper and gold.
And lastly, what's the short to medium term outlook for East Star Resources over the sort of next 12 to 18 months?
Well, for Vakuba, we expect to be taking that through feasibility study. So we'll be drilling it in the not too distant future, going through the feasibility work, and hopefully this year commencing our mining license application or filing our mining license application. And then the result of that, ideally at some point in 2027, will result in starting to build a mine. Again, just reminding everyone that we're not paying for any of that, so it's quite nice to see that play out in that sort of time frame. And I've got every faith that Xinhai has the capabilities to do that. In the context of the rest of the portfolio, it'd be good to progress Vakuba as well through exploration and development. I think I've said before, we're open to looking at partnerships on that in the same vein. But in the meantime, we've got a good team in place that will look to progress all those permissions, and hopefully we can drill that out to a JORC resource, and then continue to work with Endeavour and see if we can't make a 3+ million ounce gold discovery. I'd say it's pretty early days for that, but we're in the right neck of the woods. We've got the right partners and the right team in place. So hopefully we can deliver that too. And then watch this space on business development. If we can pick up something again from a risk reward basis that's 100% or majority controlled by East Star, we'll absolutely look to execute on that. So now that I've got the time, we're sort of dusting off the hundreds of projects that I've looked at over the last few years and seeing what we can make from that.
Alex, really appreciate your time. Thank you for obviously sharing your story, giving us an update on East Star Resources, and obviously telling us about your recent partnerships with Endeavour and Xinhai, and obviously wish you well for the remainder of the year, and hopefully you can come back on the podcast next year and give us an update. If our audience obviously wants to follow the story, get news updates, how can they go about doing that, and what social media platform channels are you on?
Sure. Well, thanks again for having me on, Rob. Our website is eaststarplc.com. We've just signed up and released, I think it was just last week, with Investor Hub. So it's a new interactive website, and you can ask questions and so on. So please go there and register your interest for news as well. And I think we tend to post on X and LinkedIn as well. So you can follow us with the hashtag EST.
Yep, we'll include those all in the show notes accompanying this episode for easy access, so our audience can reach out to you. So as I said, wish you well for the remainder of the year, and hopefully get you back on the podcast next year.
Good on you. Thanks very much, Rob. Take care.
Yeah, thank you. Thank you for listening. Hope you enjoyed that episode as always. Appreciate your continued support. Please keep sharing these episodes far and wide. We want to educate the mining industry and Kazakhstan. Obviously, we've spoken about Kazakhstan a few times, but it's a great jurisdiction, as Alex has alluded to. So please keep sharing these episodes far and wide all across the world to friends, colleagues, acquaintances, former colleagues, to educate our industry and share our knowledge around the community. So thank you again for listening, and until next time, happy mining.